Hi everyone, welcome back to this week weekly market update. So as usual, let's review on what's happening on last week, last Friday, and things to watch out for the coming weeks. Especially we are right now in the kind of like crucial situation as we know that what is going on the country. I mean on the economy itself, especially on the war side. So let's take a look on last Friday. We can see that out of the three major indices, S&P and Tech is the one that fell on Friday itself, while for Dow Jones is the one that actually raised by 0.12%. So, stock on Friday itself fell is merely the pressure or the spike in the oil prices and also the raising inflation expectations. I think the raising inflation expectation will be due to the economy data that came out on last week, especially on the core CPI. That is, I think, is well better than the expected, and that is why people will actually predict that the interest hike may continue as not what the Fed has announced like how many times per until end of this year, right? So they may foresee more aggressive measurements have to come in to stop the inflation rate. So let's take a look. Not only on that, on last Friday itself is also some economy. The company earnings reports, especially for the bank side. So few company has actually reported their earnings report, especially shares like JP Morgan's, like Citigroup, they have reported. But I guess if I'm not wrong, JP Morgan's have reported it kept up, but then it came down after that. So mainly is due to bank side is, as we always say, that interest rate high will result for banks to have more revenue because of the debt, right, of the interest they charge. So ultimately, we have to be cautious on that. Why? Because US 10U Treasury retreat a bit to 4.35%, while looking for this growth is actually quite scary on the Treasury side. Mainly is because offering 4.35% is really a competition. As you can see, that bond now are offering strong competitions for stocks, given where the U are. Alright, so this is actually said by this Jeff, LPL Chief Equity Strategy. So what it means is that people will actually go into the bond side instead to have a fixed 4.3%. You then try to speculate or try to invest in the stock market where it's more volatility. Bond offer more stable volatility, more stable choices as well. So when we come to oil, when we come to war, there's also one thing that you have to take note is actually on gold. Gold is actually impressive of last Friday, which actually shot up to 3.11%, had their best day of the years backdating to 2022. So we are looking to go where does it stand as what we predicted last 2 weeks ago. I say that there's some drop, so it actually dropped to almost the level before it spiked up on last Friday itself. Alright, so this is all happening on last week or last 2 weeks because I didn't manage to have time to do a quick update on last week video. So we are looking at 2 weeks time. So before we go into the chart itself, let's take a look what is happening on next week. For next week, do take note earnings report. As usual, this is from Earning Whisper. So there are a couple of things that you might want to take note, as we know that a couple of bank has already releasing their earnings result. So they are coming up with other fields like Bank of America, like Morgan Stanley on Wednesday itself. So not only on that, if let's say you're more on technology, and if let's say you are the EV fans, we know that Tesla is one of the big earnings, the highlight that major of people is actually watching on, and also on Netflix itself if let's say you are one of them. So just to watch out on those holding. So a couple of things to take note, especially for TSMC, if I'm not wrong, and also for, let me take a look what other things of the earnings report. It's up to you what you hold in your portfolio. All right. If let's say you're holding on to it or you intend to long or short any of it, just watch out. Yeah, another one I want to mention is actually Johnson & Johnson. Again, we'll look into the chart. Why? Just be careful. Its earnings report is on Tuesday before open. Alright, so this is the earnings report. Let's take a look for the chart itself. Alright, so this is Dow Jones chart. This is what I said on 1st October. Dow Jones may continue on the downside and eyeing to break 33,300. So 1st of October, we are somewhere around here. Okay, we are somewhere around here. Market continue to drift down, yes, but well support by 33,000 and 33,300. So after that, it has been continue to go up. Okay, so the thing is that why Dow Jones actually went up compared to the other two indices is because we know that Dow Jones does contain of some oil related company itself. So as we can see, the oil spike higher is actually brings good result for the oil itself, right? And that is why oil went higher, but it didn't go even higher. It's also just, after the end of the day, it still closed within the previous day trading range. All right, it's just slightly higher, but I don't see any green candles on Dow Jones itself, so it's not that bullish after all. And for what I say that with current economy, with coming earnings report, with what is happening on the bank performance, even with good performance, it also came down. I would suggest that we are looking more on the downside again. I'm biased with it, so let me just, it's time to delete, and I just put here. All right, let's delete this line, because after it break down, and then we will be looking to another way. So right now we just connect back the top. Okay, and then we see how it goes. Okay, so it's either it continue to drift slightly higher for you to short, or you can short at the current level if you want to, but do take note on your stop loss itself. All right, so we just put here, today is 14th October, buyer's downside. All right, so another one may revisit 33,300/33,000. All right, so this is what we are looking at for the coming week itself. Okay, so on beside that, let's take a look on Nasdaq. Nasdaq form a better chart. I didn't manage to share it, but I did manage to catch it. So sorry, let me just delete most of the stuff. All right, so as you can see, I did pointers occurred. Okay, so this is what we are looking at right now. Okay, so this is for Nasdaq itself. For Nasdaq, the good thing is that it actually came down well resisted by this descending triangle support. As you can realize, if let's say I shift this upward a bit, okay, can you see? So I've been talking to my other friends and colleagues, so what we are looking is for certain bounce back. Previously, when we are here, we're looking for certain bounce back, 15,300 for us to short, and nicely we captured this short over here. All right, captured 15,300 nicely. We managed to shut it down. So right now it's actually playing on the descending triangle, and then we are looking to see whether it will hit at this level. All right, whether it will hit at this level, 14,600, and then we will see whether it will successfully break down. Then we may see a 200 days moving average may they come into play on the support itself. All right, so this is what we are looking. Firstly, 14,600. Then we may see 200 days. So for that, we will just put here 14 October 2023. Of course, earnings season is around the corner. I mean, it's happening, so a lot of things may actually skew based on the earnings report itself. So eyeing more on downside, support around 14,600, break below, break and close below, may see 200 days moving as support. Alright, so this is what we will be looking at, and then we will review again 2 weeks later or 1 week later. Alright, so that is for Nasdaq itself. And then we will be going more into the major indices just to cover the worldwide instead of individual stock. So let's take a look on the oil itself. Alright, for oil, I remember after this huge spike, I said that there may be some pullback. So let's take a look. So this is what I written previously. As you can see that I said on 16 September, on 1st October, yeah, this is the latest. 1st October, we buyers on upside, waiting for US oil to have decent pullback around 103, 104. All right, so before you reach to 103, 104, we may want to have some pullback. So as you can see that it did really pull back a bit, or fairly quite a lot before it actually bounced up again. So this is happening due to the war itself. Alright, this is happening due to the war itself. So, but on technical perspective, we can say that this is a pullback, and then after that, a false breakdown. Right now, it's returning back to this trend line again. Alright, so, oops, sorry. So for oil, I have no other say. I will just still put it as the same thing. We will be looking at 14 October, buyers upside, believe may reach 100 before end of year. Alright, so this is what this is my own belief. Whether you believe it or not, better do your own risk management. Alright, so we'll continue buyers on upside. So for gold, yes, let's take a look on gold itself. Gold is fantastic on last Friday. So this is what we see on gold for 1st of October. We say that it may continue drift lower, support around 1815. The low it go is actually 1823 before it bounce up. Alright, it's really, I think there is a lot of people try to buy before it reach the 1815. As you can see, it used to be a very good support level. Alright, so right now, what is happening to gold, it actually returned back to the descending support area. As you can see, it's flying directly to there, but this bullish may continue after a pullback. So this support area, sorry, let me just remove this support area. All right, this support area may not hold later on, may not hold. So we need to monitor closely. They might have some changes from this way. All right, so if let's say it penetrate above this descending triangle, if it penetrate upward, then we may have to look back on the previous resistance level, which is around 1970, around here. Alright, 1970. We may want to see here as a previous resistance. Alright, break it above, then it may revisit the 2000 mark again. So for gold itself, it's very volatile. If you want to short as this resistance, please have a tight stop loss to protect yourself. This bullish is kind of like a good bullish sign, and may show a continuous sign of breaking up again. So just be cautious on your gold it takes. Alright, so okay, so that is on gold itself. So let's take a look for other stuff like alright, J&J. I mentioned we need to watch out on that. So for J&J, okay, so this is what I used to previously. So sorry, in 1st April, I think I shared in the Telegram group, or I wrote in the Facebook page as well after we hit the target. So that we remove here. Right now, as you can see, why I say just watch out. Right now, the earnings report is coming on Tuesday. Alright, so this market has been trading slightly below the 200 days, but on top or well supported by this ascending bullish uptrend support area. Okay, so if let's say the coming Tuesday the earnings report is not that fantastic, global economy is kind of like tensions, and then once it break down this support level, all right, once it break down this support level, it may show more downside for Johnson and Johnson. So just watch out, this may form here somehow. All right, so otherwise I'll just write 14th October 2023. Watch out on Tuesday earnings report, break below long-term support, may not show a good sign. Alright, may revisit 150 if break below. So that is what I am watching on for Johnson and Johnson. So right now, the best is that if you have your positions, you may want to watch out. If you do not hold any position, don't do anything yet first. Alright, don't try. I know it's a well support, we should trade with the trend, but don't try to enter before the earnings report. It may give you a huge surprise. Okay, so just be cautious on it. So this is on Johnson Johnson. Let me see what else I need to cover. Alright, I think I have spotted okay, for DAX index, this is dollar currency, sorry. For dollar currency, we say that it has some drop back, but it seems like 105 is becoming a good resistance turns support, and then the price continue to go higher. Okay, so but DXY has been running 11 sessions of weekly upside. What do I mean by that? You can take a look. 11 green candle, and right now we continue after a so-called a sign of coming down, but it actually engulfed the candle body again. So on weekly basis, on the candle itself, we may see more upside from here directly, alright, to spike even higher. So that is for dollar itself. So don't try to play the downside if let's say there is no downside signal at this point of time. Alright, otherwise 14 October 2023 dollar USD may see upside target 108. Okay, so that is what we will be looking at for dollar itself. Then the other thing is that there are a couple of stocks, so you may want to take note. Firstly is Uber Technology. This is what we draw previously. Let's remove all drawing, and then we just go back to the daily itself. So we can see that Uber has a very a bearish candle on last Friday. So we can see that here is a decent support area, and if let's say it break below, we may see more on the 200 days to play into the game of the support next level. So I'm looking at around here 40 or $40.70 as a next support. So right now we just put for Uber is 14 October 2023 break and break and close below 43.50. May see downside and TP support at around 40.70. Alright, go in. Support at 40. Okay, so we just put here first. Alright, so that is my take for Uber. If break below, we may see here. Okay, so just be cautious of your things. Another one I want to mention is actually MRO. MRO is actually a Marathon Oil Corporations. Okay, so we can see that there's a breakout. Like I said, due to the oil itself, right? The oil actually went higher. So this breakout on a weekly basis, we can see is a nice clean breakout. So we are looking for more high side on the oil. I mean, of course, a lot of people will just leave it here. Then we will put as, but I will just prefer a huge raw figure at $30 for me. Okay, so around $30. Okay, so for oil, we continue the momentum of it, and we may see the upside to reach around 30 plus. Of course, there is gap in between, so just be cautious. It may be a volatile market, so otherwise we are just right here 14 October 2023. Okay, May right on oil upside, looking at next resistance around 30. Okay, so that is what we are biased on for this company. Alright, so that's all for this weekly market update. Hopefully you guys enjoy. Of course, the market is volatile right now, especially at this current situation, whereby US is involved in two war. As we know, the Russia one has been dragging until now with Ukraine, and right now it's the Gaza war. So I think US is actually facing a huge debt right now. So the US Treasury, the interest rate, there's a lot of pressure coming up. But this whole coming 2 to 3 weeks is actually the economy data, and then we are coming to the end of the year. So end of the year, definitely the sales may pick up. So hopefully it will help on the China side. Okay, so just to cover the Hang Seng Index as well. So this is Hang Seng Index, which I mentioned on 1st of October. I'm saying that there is a Fibonacci 38.2%, which is around 17,700 support level. Break below, no reversal in Hong Kong, highly possible to drift lower. So actually it came down to around 17,200 and it go up. Right now, the price is back to the 38.2%. So it's like flirting with you. Okay, but if let's say you are playing on the just simply one moving average itself, that means you are playing on 50-day. This is a well resisted by the 50-day moving average. What do I mean by that? You just move here. This is a well resisted by the 50-day moving average, and if we continue to break 38.2%, we may see it drift lower again. Otherwise, this 38.2% need to hold. But the thing is that the Chinese side, the data is not very good. As you can see, the sales, everything is dropping, so it may actually continue to cause more downside for the Hang Seng Index itself. Alright, so right now we just simply write 14 October 2023 resisted by 50 days moving average. Okay, may if again break below 38.2%, oops, may see downside once again. Okay, with China weak economy data, highly possible. Right, so this is what we are actually banking on. So just be cautious if let's say you are still holding on Hang Seng or China A50. As we know, China A50 break below. All right, so Hang Seng side, I don't see any good sign at this current moment. Can you see? All right, so just be cautious for the Chinese play. I think things may turn slightly better if the property gloom, has right off, and also when we come to the end of year, sales will start to pick up. Otherwise, it's tough for the Chinese market at this point, especially those Chinese ADR as well. All right, so that's all for this week Willy Market Update. Hopefully you guys really enjoyed, and remember to share and like. Lastly, if possible, just follow my Telegram group. I will try to update as much as possible over there. All right, that's all. See you guys next week again. Bye bye.